They've been feeding you fairy tales. Every glossy trading seminar, every polished YouTube guru with their Lamborghinis in the background, every rags to riches testimonial splashed across social media. They've convinced you that conquering the markets is all about unlocking the perfect strategy, nailing down those magical indicators, or dissecting charts like a surgeon. But that's the smoke and mirrors, the illusion they peddle to keep you hooked on their courses and signals. The real divide between the traders who build empires and those who end up as financial roadkill, it's not in the tools or the tactics, it's buried deep in the psychological trenches you have to crawl through. I'm drawing from the ghosts of trading legends like Jesse Livermore, who turned pocket change into fortunes that could bankrupt nations, only to watch it evaporate time and again. Through his cycles of triumph and ruin, 4 bankruptcies, unimaginable highs, and soul-crushing lows, he unearthed a truth that's deliberately obscured from the masses. There aren't just random pitfalls in trading. There are 4 concealed phases every aspiring trader must endure before tasting sustainable success. These phases have zero to do with candlestick patterns or economic reports, and everything to do with the mental warfare that unfolds when your hard-earned capital is on the chopping block. Stick around until the credits roll on this video, and I'll not only pinpoint exactly which phase is trapping you right now, but also arm you with the precise steps to shatter its chains. Because recognizing your current hellscape, that's the invisible key that unlocks the door from perpetual frustration to the kind of freedom where profits flow like a steady river, not a fleeting storm. If you've caught my previous breakdowns on the subtle habits of elite traders or the red flags that scream amateur hour, you already have a glimpse of what victory tastes like once it arrives. But what the industry glosses over is the inferno you must traverse to claim it, the raw, unfiltered agony that weeds out the dreamers from the doers. This video pulls back the curtain on those forbidden phases, because, let's face it, if the gatekeepers admitted how grueling this path truly is, their subscriber counts would plummet as hordes of hopefuls fled for safer hobbies like stamp collecting. Before we plunge into the depths, though, let's make this interactive. Smash that subscribe button if you're committed to outlasting the quitters, drop a like to fuel the algorithm gods, and tag a fellow trader in the comments who's grinding through their own battles. They deserve this wake-up call. The markets don't hand out sympathy points, and neither will I. But if you're here because you're tired of bleeding equity and ready to evolve, these insights are your secret arsenal. Now, let's unpack these 4 phases, not as some motivational fluff, but as the brutal roadmap drawn from the blood, sweat, and margin calls of those who've actually lived it. I'm sharing this not for glory or views, but because forewarned is forearmed. The torment you're enduring isn't a sign of inadequacy. It's the forge reshaping you into something unbreakable. Understand this foundational truth before we dissect each phase. These aren't mere learning curves or skill-building exercises you can cram like a college exam. They're metamorphic trials designed to dismantle your core illusions about control, risk, and human nature under pressure. You'll shed layers of ego, false security, and impulsive habits that sabotage even the sharpest minds. Rushing through them is futile. I've witnessed countless traders attempt shortcuts, from mimicking hedge fund plays to shelling out thousands for guaranteed systems or subscribing to alert services that promise easy wins. Without exception, they crashed harder. Because these phases aren't about accumulating knowledge, they're about profound personal alchemy. The trader who emerges victorious on the other side is a fundamentally altered being, forged in the fires of real-world losses and hard-won wisdom. The markets exact a toll for entry into the winner's circle, and that toll is the surrender of your preconceptions, your comfort zones, and sometimes your sanity. Only after paying in full, after being deconstructed and reassembled, do the gates to consistent gains swing open. As we navigate these phases, don't passively absorb the words. Scan your own trading journal, your recent P&L statements, your emotional roller coasters, and spot the echoes. You're entrenched in one of them this very moment, and that awareness is your lifeline to progression. Phase 1. The annihilation of overconfidence. Picture this. A wide-eyed novice, perhaps you a few months or years ago, stepping into the arena with fresh capital and a head full of beginner's luck. Like Livermore at his bucket shop debut, you spot what seem like obvious signals, rising trends that scream buy now, support levels that feel ironclad, or news catalysts that align perfectly with your bias. Your initial trades might even pay off handsomely. A quick 20% gain here, a doubled position there, and suddenly you're invincible, wondering why the world isn't overflowing with millionaires. The dopamine rush is intoxicating, turning the screen into a personal ATM. But markets, in their infinite cruelty, don't ease you into reality, they ambush you. I recall traders I've mentored describing their first major wipeout. One bet everything on a tech stock amid hype, ignoring whispers of overvaluation. Another averaged down on a currency pair during a geopolitical flare-up, convinced the dip was temporary. The reversal hits like a freight train, no gentle pullbacks, just sheer velocity that evaporates accounts overnight. This phase is a merciless educator, torching your illusions that intellect or research alone grants immunity. You discover that overconfidence isn't a strength, it's a liability that amplifies risks, blinds you to exits, and turns manageable losses into catastrophes. The market doesn't respect your spreadsheets or your gut feelings, it exposes them as mirages, forcing you to confront the humbling reality that randomness masquerades as patterns, and your so-called edge was often just survivorship bias in disguise. For the masses, this is the exit ramp. They label trading a scam, retreat to index funds or day jobs, and spread tales of rigged systems. Yet, for the resilient few, this demolition sparks a pivot, not outward blame, but inward scrutiny. You begin dissecting not just failed trades, but the mindset that birthed them, the greed that oversized positions, the fear that held losers too long, the arrogance that skipped due diligence. Phase 1 concludes when the sting of defeat morphs into genuine humility. Not the performative kind, but a bone-deep acceptance that wrongness is inevitable and that survival hinges on respecting the market's supremacy over your ego. This newfound modesty doesn't guarantee wins, but it clears the debris for the deeper disciplines ahead. Phase 2. The forging of unyielding discipline. With arrogance in ruins, you enter a deceptive calm, a period where glimpses of true market dynamics emerge. No longer chasing every flicker on the chart, you start recognizing legitimate edges, confluences of volume spikes, trend continuations backed by fundamentals, or reversals telegraphed by institutional footprints. The agony here? Restraint. You've evolved enough to spot setups, but wisdom demands you ignore 90% of them. This is the era of the sideline spectator, where boredom becomes your constant companion. Livermore exemplified this during the prelude to the 1907 panic, observing frothy speculation while resisting the siren call to join the frenzy. He waited months, enduring the psychological itch of missing out as peers raked in temporary gains. In your own journey, it might manifest as staring at a volatile crypto chart, knowing a breakout looms, but holding fire until multiple timeframes align, or passing on an earnings play because volatility metrics scream caution. This phase dismantles the action addict within, teaching that hyperactivity erodes edges. Every unnecessary trade chips away at capital through commissions, slippage, and emotional fatigue. You construct not just a trading plan, but a fortress of rules, predefined risk parameters, position sizing tied to account health, and ironclad exit strategies that override whims. Yet, the real battle is internal, taming FOMO during bull runs, quelling revenge trading after losses, and cultivating the zen of inaction. Progress feels glacial. Your account might flatline or creep upward modestly, far from the explosive growth fantasized in ads. Many falter here, reverting to old habits for the thrill, only to regress to Phase 1 wipeouts. But persistence yields compound magic. Small, consistent edges stack, drawdowns shrink, and confidence roots in process over outcomes.
This phase matures when discipline ceases to be a chore and becomes instinctive, a quiet power where skipping subpar trades evokes satisfaction, not regret. You've internalized that true profitability stems from preservation, not pursuit, positioning you as a guardian of capital rather than a gambler in disguise. Phase 3. The mastery of adaptive intuition. Humility and discipline form the bedrock, but they alone won't elevate you to the pantheon of trading titans. Enter the enigmatic realm where analysis gives way to instinct, where you evolve from reacting to the market to anticipating its whispers. This isn't mysticism, it's the culmination of thousands of hours immersed in price action, transforming subconscious pattern recognition into a near prophetic sense. Livermore described it during his 1929 short-selling coup not as outguessing the crash, but as syncing with the market's undercurrents, the subtle shifts in tape reading, the ebbing enthusiasm in volume, the intangible feel of impending doom.
In modern terms, it's exiting a long position mid-rally because sentiment indicators hint at exhaustion, or scaling into a winner as momentum builds without rigid rules dictating every move. Here, you transcend mechanical systems. Rules remain, but they're augmented by a fluid awareness that detects anomalies, fake-outs that fool algorithms, crowd psychology tipping points, or macroeconomic ripples before they swell. The isolation is profound. Your decisions defy easy explanation, sounding like hunches to outsiders, yet they're honed by scars from prior phases. Challenges arise in over-reliance on this sixth sense, risking complacency, so vigilance demands ongoing journaling and backtesting to validate intuitions. Mastery arrives when flow states dominate. Trades unfold with effortless precision, positions are held through noise without panic, and profits accrue not from force but harmony. This phase reveals trading's poetic side, less a battle, more a dance with chaos. Phase 4. The transcendence of legacy. Beyond personal mastery lies the ultimate evolution, where trading becomes a vehicle for broader impact, not just wealth accumulation. Having conquered the internal demons, you now confront the void of what next. Livermore's later years hinted at this, penning reflections to warn others, even as personal demons persisted. In this phase, profits fund philanthropy, mentorship, or innovative ventures. You build communities, author books, or launch platforms demystifying the markets for the next generation. It's the shift from survival to stewardship, recognizing that true success echoes beyond your balance sheet. The pitfalls? Hubris reborn, or detachment leading to recklessness. Yet navigated wisely, it cements your legend, turning individual triumphs into collective empowerment. The unvarnished reality the suits on Wall Street bury, these phases are non-negotiable. No algorithm, no mentor's blueprint, no high-ticket mastermind can teleport you past the grind. You must bleed equity, endure sleepless nights analyzing flops, and rebuild from ashes. My own path mirrored this. Early overconfidence led to a 70% drawdown. Disciplined waiting rebuilt my base. Intuition turned consistency into growth. Now, sharing these truths amplifies it all. If you're mired in phase 1, embrace the lessons in every loss. Journal relentlessly. Scale down risks. Seek objective feedback. Phase 2 strugglers, drill patience through simulations, enforce no trade days, celebrate avoided disasters as wins. For those edging into 3, cultivate that inner voice via meditation on past trades, diverse market exposure, and peer discussions without ego. And if Phase 4 beckons, channel your edge outward, mentor a newbie, document your system, give back to balance the scales. Remember, the markets aren't a sprint,
They're a marathon of self-discovery. The fortunes are mere byproducts. The real prize is the unbreakable resilience forged along the way. Down in the comments, spill it. Which phase resonates most with your current grind? Phase 1 and its ego-shattering blows? 2's endless wait? 3's elusive flow? Or are you glimpsing 4's bigger picture? Honesty accelerates your ascent. If this roadmap illuminated your path, like it up, share with a battling trader, and subscribe for more unfiltered truths. They're coming. The markets await your evolution. Don't let them down.